Good afternoon. Today is Friday, June 19th. This is Craig Modelmog for this week's episode of Wall Street X's and O's. So welcome. Hope everyone's doing good, had a good week. To kick things off, I would like to remind everyone that the opinions, thoughts, information that's provided is not a solicitation nor a request to buy or sell anything from an investment standpoint. I might remind you that investments can and will lose value, and today our goal, as it is in every episode, is to try to be straightforward and really focus on the facts. I'm a big fact guy. The numbers do not lie, and that is what I truly try to focus on, and trying to help you be informed, one, and two, become a better investor. Okay, so today we're going to jump right in here. I had the good fortunes this week of hopping on a conference call. Actually, it was a video call where there was a really I'll call him a rising star. He's a demography analyst. Say that really fast on Fridays. My tongue about turned into a knot right there. His name is Neil Howe, and he just wrote a book called The Fourth Turning. And he was really talking and kind of giving an update on this COVID pandemic virus. So I've got some most recent data that he has been gleaning from various epidemiologists and also infectious disease people. Obviously, as we know, there's a very mixed outlook on the U.S.'s case from a trend standpoint as well as from a death standpoint. We're seeing the numbers of people contracting this trending upwards, which is a direct result of better testing and more testing. This is a good thing. We're seeing deaths, at least at this time, trend downward. I think we're learning how to treat this better. Spoke with a client of ours who is a emergency room doc, and he said he really feels they're getting a better handle on how to treat it. So it's a good thing. Not that they're solving the puzzle, because they're not, but they're becoming better at addressing what's going on. The big number I think we need to focus on, and this is what we are seeing across the United States in many different states, is rising numbers of people checking into hospitals. Okay, so it's not so much checking on the number of tests and who is contracting it, really focus on the number of people checking into hospitals. Okay, we're seeing parts of the country, particularly in Arizona, Phoenix, and in Tucson, looking at parts of Southern California, looking at parts of Texas and Houston, looking in Florida, and where we're seeing visits to intensive care units, emergency rooms are starting to rise. That's a bad thing. Okay, so if there's a number you need to focus on, people, it is that. Okay, in addition to that, we're starting to narrow it down that symptoms now are really coming in 3 to 5 days is what we're tending to see. Some are longer, obviously, but the real emphasis is on these super spreaders. Okay, these are young people that are out. I think there was a deal here recently in Florida. A young lady had been staying in, hunkering down. They finally says, "Oh, finally, screw it. We're going to go out. We're going to go out." And they hit a bar one night, and in the midst of that, many people contracted this. So what's that is about, again, it's not so much about you, and I keep saying this. It's doing the right thing, not only to protect yourself, more importantly, protect others that you come into contact with, okay? And another thing, the credibility of the data is improving. We're seeing more and more data coming in, which is what we did not have a couple months ago. So the credibility is improving. So a lot of people were poo-pooing data and going, it's a bunch of BS, not listening to it. That's not the case. We're starting to get really good quality data come in. We are seeing U.S. mobility increase, meaning people are starting to do things. Ton and I went out to Shields this last Saturday, probably our first shopping experience. We pull into the parking lot there, 2/3 to 3/4 full. I would say going inside, it was 80-20. 80% of the people had masks on. I was one of them. 20% did not. I must say it wasn't a real comfortable feeling. I'm not sure how you're feeling, but you know what I'm finding, and it was kind of a sad realization of the impacts of how this is impacting us. Really didn't feel comfortable in a big group setting, okay? That's one thing I did find. Other stat, World Health Organization was backing off claims that it was rare that asymptomatic, meaning people that were showing very few or no symptoms, could not transmit this. They're saying that that is really not the case anymore. I think the bigger thing was, how is this COVID-19 going to change our behavior? I'm going to compare this to the Depression in World War II as a time in which this reshapes how we view life. It reshapes what we do, how we do it, how we spend money, how we save money. This, I really believe, is going to be one of those times. Not that I'm a historian or anything, but just from people I talk to, I look at myself, having served a lot of depression babies or depression era people when I first got in this business. You note how they did things differently. They were savers. They didn't spend money. They looked like they didn't have two nickels to rub together, yet they were millionaires. They didn't trust banks. They would keep dollar bills or $20 bills, or cash is probably a better term, in Folgers can in their house, okay? Moving on, face masks, do they help? I think what we're seeing, it's becoming a way where we're starting to be able to track the effectiveness of wearing a face mask. I'll be the first to raise both hands. Don't like wearing it, okay? In my building, they actually require us to wear face masks walking around the hallways, going to the bathroom. I must say, does Tanya wear her face mask going to the bathroom? Yes, she does. Does Craig wear his? 50-50. Kind of depends how I'm feeling. It's not good going to take a pee with a face mask on. I'm just saying, okay? But it is good. We're finding out that from a cultural standpoint in Asia, they are used to more frequent epidemics. They also have denser, more urban population. They also are using it as emphasizing it's really a social cooperation, a level of solidarity that they feel, and they feel that the purpose is altruistic. They're really doing it to protect others. This is something we find in Asian cultures, and it really goes back to the SARS breakout from 2000 to 2004, 2 years long, okay? Actually, 3 years long, okay? Latest studies here. This came from the source. It's an international source. I don't speak this language, so I can't even tell you where I got it. It's right here, and you can see it. It's legit, okay? They track 3 different groups: universal mass cultures pre-March 15th that were recommending or distributing before March 15th, universal mask recommendations after March 15th, no universal mass culture recommended or distribution as of March 31st, okay? Here's what I find. The last one, which is no mass culture or recommending as of after or on March 31st, very bad numbers. The two at the top of the range, the United States and Brazil. That's interesting. The second group, universal mask recommendations after March 15th. You saw their curve flatten. Austria, Chechnya, Slovenia, Slovakia. Positive signs after. The top performing groups, universal mask culture or a recommendation or distribution before March 15th. This is an interesting group of countries: South Korea, Japan, Singapore, Gungadong, probably pronounced that. Don't make fun of me if I don't speak I don't speak that language. I'm sorry. Hong Kong, Taiwan, Beijing, Shanghai. What does that go with? This one here, talking about culturally, how Asian cultures is part of their culture. In the United States, it's not part of our culture. We're terrible at it. I think we're in the US, I think we're soft. We're not used to this crap. We're used to going, oh, that's them. Watching on the news, that's them. Guess what, people? It's us now, okay? Be smart. Do the right thing, okay? Looking at how oral infusion spreads, okay? Stanford study. This was in May 4th, 2020. They talked about the infusion of saliva droplets because they're saying it's from saliva or spray from our mouths, okay, is how this is basically passed. What they're finding is that loud speech emits 2,600 small droplets per second. This is a Stanford study, no BS here. The half-life is about 8 minutes. Here's what's interesting, okay? They're finding in humid climates because of the humidity, it grabs on these droplets and they float to the ground. So thus air life is cut in half at least. In dry climates, i.e. Colorado, i.e. Utah rising, Arizona rising, fascinating, okay, dry climates. Here's what's also scary. What are the climates where it is rising the fastest? Florida, humid. North Carolina, South Carolina, humid. Texas, Houston, stinking humid. California, humid. Okay, here's the deal, people. We are reopening. Colorado's reopening. New York's reopening. All these states are reopening. Okay, just saying. Watch it. All right. Moving on here. I really think that the first round of this pandemic, and we're going to go economic now, shift into economic. I believe the pandemic was Act 1. Okay, the pandemic hit the economy. I really believe what the pandemic has showed is that the economy wasn't on as steady a footing as we really once thought it was. I'm really waiting for the second act. Okay, I've had a few people got into a very interesting. I was going to say very intense conversation with a client last week. She's not happy with our performance. We're very conservative. Craig, I really feel like we missed this uptick in the market. I said, well, based on what was going on in with the pandemic and the markets, looking at the economy, I really used this updraft in the market to reposition, okay? Again, focusing on the number. I believe the second act is going to be a credit crisis. And when I say that, it's focusing on corporate credit. Could it expand outwards? Who knows? We're going to find out. We have more corporate debt that's been issued than any time on this planet. Okay? We have seen 1,200 downgrades. I'm looking at my cheat sheet here. 1,200 downgrades from rating agencies on corporate debt since the start of the year. That is more than we saw during the entire financial crisis in 2008 and 2009. That extreme close-up. In Wayne's World, extreme close-up, okay? Yes, I did like Wayne's World. It was a good show. So anyway, 1,200 downgrades, that's just since the start of the year, guys, okay? People talk, I listened to another lady talk about an unnamed catalyst is what's going to be the next thing here, which is really probably the pandemic. I think we're going to see an unwinding of this corporate credit bubble, which is not pretty. People say, Craig, that's kind of a harsh word to say. Well, think about this. The federal government a month ago came out and says, we're going to create a credit facility in which we can buy corporate exchange traded funds, okay? BlackRock stepped in, all these big financial companies stepped in. We will help you facilitate the purchase of these corporate exchange traded funds, both investment grade and junk bond debt, okay? 2 weeks ago, they started buying them. Markets exploded to the upside, went up big time. Wednesday, Fed Chairman Powell comes out and says, you know what? We're actually going to expand this and we're going to start buying individual corporate issues. Okay? Here's where I'm talking about corporate credit bubble and how this is unwinding. The federal government and Federal Reserve cannot bail out corporations. Only the government can. The Federal Reserve cannot lend money to corporations. Okay? So what's a workaround? We're going to buy their debt. I'm very anxious to see what corporations they are buying. Are they going to cherry pick the best stuff out there? No. This is going to be, we're going to cherry pick those corporations that we see as necessary to survive this credit crisis that is still starting, and that's what we are going to buy. So, in the future, I will be reporting on here's who the federal government has been buying. This is going to be interesting. Flashback, 2008 financial crisis. There are, I'm going to cite 3 situations here of which the Federal Reserve told 2 of them, we're not bailing you out. 1 of them, we are bailing out. 1 of them, Bear Stearns, long-term investment bank on Wall Street. Sorry, not bailing out. Bankrupt, gone. Second one, Lehman Brothers, not going to bail you out. Sorry, gone. Third one, Merrill Lynch, worked for them, bailed them out. Bank of America bought them. Okay? That's called the federal government is going to pick and choose whom they are going to buy, and in this case, it's whom they are going to bail out. You watch, this crap's going to happen, okay? The problem is we have negative corporate cash flows, okay? We have a pension crisis. Do you know there are $7 trillion in unfunded pension liabilities hanging out there? Guess who owns all this stuff? Pension funds, foundations, mutual fund companies, BlackRock. Wow, they're only the largest money manager on the stinking planet. Why do you think they're getting involved in helping the government buy this crap? Okay, I'm not a big conspiracy theorist. Guess what? This is a big deal. Okay, everyone's focusing on pandemic, and that's the problem. That is not the problem. That is a source that led to this problem or accentuated this problem. Okay, the pandemic is one deal. Here's where the federal government and President Trump and all the Congress and the Senate are between a rock and a hard place. You can only bail so many people out for so long. Okay, if things don't snap back quickly, and I'm not just talking businesses open, I'm talking revenue, I'm talking sales returning to normal levels. If that doesn't happen, it's going to get interesting, okay? Write it down. You heard it from Craig first, okay? And that's what I'm focusing on. That's what you have to focus on, the facts, okay? You don't hear about that stuff. Has anyone heard about that stuff? No. I go digging for that stuff. Why? You have to focus on the truth, people. When you look at investing, you can't invest on emotion. There are lots of people flooding to this market right now and buying stuff, and I think they are fools. This is not a time to buy equities. We have high volatility. When we're in a high volatility market standpoint, looking at the VIX index, which is north of 20, we've been north of 30 people consistently since the last week of February. Okay, today the VIX closed up 2 points at 35.12, up 6% on the day. We have high volatility. Elevated volatility means you can't buy equities long. Okay, and that's why we're not doing that. So here's the deal. Last thing, and I'm going to get out of here early today. I'm only at 17:20. I'm going to try to get out of here by 18. If you look back at all the bear markets do not end abruptly on the first sign of a bailout. That's what people are thinking now. I'm calling the full one on that. Typically, they end months after with a multitude or a volume of fits and starts. On average, bear markets end after 20 months. The median, which is the middle, is 18 months. You know where we were at? Month 3. Okay, here's the deal, people. We have to focus. We have to keep our eye on the ball. We have to eliminate emotions. Okay, we're going to buy high quality things that we know what they are. Government treasuries, short term, intermediate term. Tips. Why? Inflation is going up. The dollar value is going down. Why? The government is trying to devalue the dollar. When the dollar goes down, you know what happened? Inflation goes up. You know what the number one rising product or service was out there? Groceries. You've been grocery shopping lately? It's not getting cheaper. They're going up in prices, people. What happens? We are about to enter a stagflation environment, and I'm going long. See, I get fired up, I start spitting, and I go long. Stagflation is potentially what the next economic environment we are going to be in, which is growth going down or declining, inflation going up. You heard it here, not first, because my sources, that's what they're saying, okay? I'm not listening to the old wall garbage, which is on the sell side. All they're trying to do is sell you something to prop the crap up that they bought. That's what they're doing. So anyway, it is Friday, June 19th. I love this stuff. I hope you all are doing well. Be safe, be smart, wear your mask, not for yourself, for other people. Exercise social distancing. If we do that, we'll be like Asia. Things will flatten out. I think we're in for a little bit of a rough go here because things are accelerating. We've got these small things called people walking around the streets in every major metropolitan city around the United States. It's been about a week. It should get interesting here the next week to 10 days, you think? Anyway, this is Craig Model Mog for this week's version or episode of Wall Street X's and O's. And I am out.